Boom! The NFL season opener is upon us. The housing market's lined up in cover 2. Buyers are staring at 3rd and long.
That's right, Manly, and rates are still sticky and inventory's tight. But don't panic. Today, we're drawing up the playbook on how to read the market, make audibles with down payments, and even score when the defense is tough.
Yeah, Anthony, here's the challenge. Affordability feels like trying to run against an all-out blitz. Prices are up 4.5% year over year, and supply is down to only 3.2 months. That's fewer homes and higher price tags.
That's right, but there are ways to win, and we're about to show you how with the right plays, leveraging the 401ks, even audibles with turning golden handcuffs into opportunities, and knowing when to lock in rates. Strategy beats fear every single time.
Welcome to the Mortgage 101 podcast with Anthony and Manley.
Sanchez throws middle. What a shot by Lewis.
Cha-ching, cha-ching, move the chains. Hey folks, here's today's playbook. First, the market recap. Where are rates now and what's driving them?
That's right, Manly. Then we got 3 subplots. Gen Z's 401k audible, the golden handcuff dilemma, and why the housing defense is stronger than what the headlines say.
Hey, Anthony. Then we'll wrap up with producer Ryan's Pop Warner Buzzwords drill, the Mortgage 101 rate prediction tracker, a buyer win, big win, and a locker room send-off.
Hopefully you like all the education that you're getting from Manley and I. Do us a favor and smash that like button, subscribe and follow, and tell all your friends and family about us.
A blitz. Mariota flattened.
Hey folks, market recap. Rate drivers. August was a grinder. The 10-year Treasury averaged 4.31%. Eeks.
Higher yields equal higher rates for the buyers. Lower yields equal better chance for lower rates. That's what we're seeing.
Yeah. Hey, Anthony, MBS mortgage-backed securities, they slipped 0.4%. Translation, investors pulled back. Lenders priced cautiously, and rates nudged a little higher.
That's right, and approvals got tighter too. Buyers need clean playbooks, credit, docs, income. There's no sloppy passes here. They got to get it together and quick.
Yeah, hey, but the good news is banks still hold $2.7 trillion in MBS mortgage-backed securities. That's long-term belief in the housing market. You know, we're here. This isn't like 2008.
No, exactly. It's not 2008, and they're showing it based off of their confidence. I mean, just this week, we see the 10-year yield close at 4.23. Lower yield equals better rates, which is what we want, right? So the volatility's back. Yes, rates can spike, just like a linebacker blitz. But at the end of the day, we're seeing what we want.
Love protected. Love going deep. Christian Watson, the intended receiver, and he's got it. A big play up top on the first play. And what a start.
Just like I said, anything could happen. Like the Green Bay Packers getting Micah Parsons from the Dallas Cowboys. Thank you, Jerry.
Is that Michael or Micah?
It's Micah.
Okay, Manly, let's talk about Gen Z and the 401k audibles.
Z, Devery Henderson, Chris Ivory, Green Right Nasty, Z Peel, Fake Slash 37, Buster Bluff, Naked Right, X Post, Wide Bite. That'll be the first call.
Gen Z rookies are asking, should I tap into my 401k for a down payment or let it sit?
Hey, old coaching said no. 25K at 7% could grow into 75,000 by retirement.
Yeah, but if you use that $25,000 on, say, a $500,000 home, you're looking at $20,000 a year just in the appreciation. At 4% plus, $8K in principal paydown, plus all the tax perks, you're talking almost $30,000 in year one. I think that old school mentality needs to be benched.
And later, that home can rent for $2,000 a month or more, and that's leverage. Compounding plus cash flow. Woo!
Yeah, and don't forget the bank of mom and dad or the bank of relatives. Gift funds are allowed. Do not be afraid of them. You just need the documentation, and tons of buyers right now are using it.
Yeah, so it's not a Hail Mary. It's a designed audible. 401k, gifts, down payment assistance. The key is calling the right play for your situation. If you guys are liking all the information you're getting from us, if you're feeling that we're educating you, please smash that like button, subscribe, DM us with any thoughts or ideas for our show, and also tell your friends and family about it. Let's talk about golden handcuffs, the playmaker's masterpiece. Plenty of veterans are stuck with golden handcuffs. 2.8% mortgages they don't want to give up.
That's right. When we say veterans, we're not talking about our honorable heroes. We're talking about people who own houses currently, veterans of home ownership. But most are also sitting on $200,000 in equity, juggling high interest debt, credit cards at 22%, autos at 9%, student loans at 11%. That's a lot of amortization.
That's why you have to look at your overall combined interest rate. Everything you owe, not just your mortgage rate.
Yeah, it's the blended rate, right? It's the play. It's, let's see, okay, yes, the mortgage may rise because you're going to see a 2.8 go around to 6%, but rolling 50K of 22% debt and 6% drops your blended rate. That is a no-brainer.
Lowers your monthly payment too, right? Credit cards are a 5-year sprint. Shift that into a 30-year mortgage and your monthly payment drops. Flexibility means you pay less when you need to, and that extra money can go straight to the principal. You can turn that 30-year fixed into a 17-year fixed if you do it right.
Yeah, Manly, that's field position, right? I mean, that's one manageable payment, more cash flow, and it gives room for big plays. Like you could save for rainy day, investments. It's exactly what you said. It's a play designed to make meaningful change on how much you're paying and the time frame too. A lot of people are afraid. They're like, oh, well, you know, I'm going to take my credit cards and stretch it into a 30. Well, yeah, if you pay minimum, but all that money you're saving, now you have the autonomy to be able to pay at your leisure, and most people are going to pay it, and all that extra money you're paying on top of the minimum goes 100% towards the principal pay down. That's a win.
The high-level takeaway is play the whole field. It's not about one stat. It's about your total debt strategy.
Talk about these headlines versus reality. The headlines shout, delinquencies are soaring. Oh my gosh, the sky's falling.
No. Reality check. Mortgage delinquencies are still 3.6%. That's record lows. The real stress is credit cards at 8, 10, 20%, some as high as 30%, and auto loans at 7 to 12%. That's the problem.
That's right. So housing is still anchored. I mean, homeowners have, what, 300,000 plus average in equity. Unemployment's still low at 4.2. That's not 2008. That's just people having a lot of equity and not doing anything with it.
So don't fear the blitz. Housing defense is still holding very strong. All right, folks, it's Buzzword Breakdown.
Wildcard time. Producer Ryan, you're up.
Listen up, team. 5 buzzwords, 5 plays, no fumbles.
Second down and 5. Garoppolo pass is caught. Now that ball's out. This is a fumble at the
First one, closing costs.
Aye, coach. Think of closing costs like the stadium entry fee. Usually it's 2 to 5% of the loan amount, covering things like lender fees, title, insurance, escrow. It's what gets you into the game, and it's what's needed in order for the loan to close.
Second word, gift funds. Who's bringing the heat?
You sound like a big tutu thing.
All right, Coach. That's when mom and dad, Uncle Lou, or even a close relative gives you money for your down payment. But here's the kicker. It has to be documented correctly with a gift letter and proof of transfer of funds. No under-the-table handoffs allowed.
Third down, escrow holdback. What's that play?
Okay, Coach, escrow holdback. That's when something at the property, like a minor repair, can't be finished before closing. So instead of delaying the game, money is set aside in escrow. Once the work's done, the funds are released, keeps the clock moving. It's a way to not call timeout when we need to get to the end of the game.
Fourth buzzword, appraised value. Who's spying the ball?
All right, Coach. The appraiser is the referee.
Holding, offense.
They decide the official value for the lender based on comparable sales. Zillow or Redfin, they can be estimates, but the appraisal is the only number that counts when it comes to the loan approval.
Fifth and final, income verification. Who's got it?
Okay, coach, that's your combine tape, right? That's the proof you can play at this level. Lenders need steady pay stubs, W-2s, tax returns, or verified self-employment. The stronger or more consistent it is, the better your draft pick is in mortgage terms. This is what it's about, just understanding what we have to play with.
Now hit the hole, drive those payments, and score big.
That's why we only let producer Ryan out once a week.
The mortgage world's loudest Pop Warner coach. If you guys are liking all the information you're getting from us, if you're feeling that we're educating you, please smash that like button, subscribe, DM us with any thoughts or ideas for our show, and also tell your friends and family about it. All right, folks, the ever popular Mortgage 101 Rate Prediction Tracker. It is time. Let her go.
Here's the 30-year fix from January all the way through August of 2025. So January is up 6.65. Fed stayed tough on inflation. February, 6.55. Flat. Market paused. Now we're looking at 6.4 in March. It was down due to softer inflation data, but April, 6.25. Even more down. Treasuries dropped. MBS demand improved. May, 6.2. Flat. No big shock. June, ticked up 6.35. Stronger jobs reports, reignited worries. But then July, 6.5, up even more. It was a bond sell-off and the Fed's caution. But August, we're back down, 6.4. What does that mean? Well, it's cooling inflation. It's investor demand that's returned. It's a lot of things that are going in the right direction now.
So rates bounced around a lot in the mid sixes, but August gave buyers some breathing room.
Yeah, I mean, the takeaway is don't wait for perfect. Be ready to lock when the window opens, and you know when that window is going to open. You're going to see it bounce. It's going to be bouncing in the right direction over the next 12, 24, 36 months. So at the end of the day, you want to, jump when the time's right for you, not when you think the time's right for the market.
Hey, just to add to the rate prediction tracker, because we're talking about what's going to happen, end of year, and trying to pull out our crystal ball and talk a little information that we hope you guys are betting. But we're going to put a little favorable bet on the Packers winning the Super Bowl this year after the pickup of Micah Parsons.
Yeah, we know that's not going to happen, Manly, and you're in la-la land right now, and that's unicorn thinking. We know that the Niners are going to win, and we don't have to go and we don't have to explain ourselves because it's the Niners.
Who?
So,
who?
Yeah, I mean, it's, I'm just talking facts. I mean, that's just facts.
We see what's going to happen when it comes Super Bowl time.
Hopefully you like all the education that you're getting from Manly and I. Do us a favor and smash that like button, subscribe and follow, and tell all your friends and family about us.
Here we are, folks, with the real life big W, the big buyer win. I got to tell you about a win from last Friday. About 2.5 weeks ago, I got a Saturday call. My buyers are at an estate sale. They didn't buy any of the junk that was being sold, but they pulled the ultimate flea flicker. They bought the house straight from the owner. They're calling me asking, can we do this? And I'm like, just get me an accepted offer. That's all that's important.
Wait, so they went looking for a Tiffany lamp and ended up coming out with a deed?
Exactly. The seller said, I'm moving to Italy and I need to close by the end of the month. So that's basically the 2-minute drill with no timeouts. Make it more fun. These buyers are super complicated, messy finances, and need some serious structuring. I've worked with them before. It's a lot of fun, and I'm saying that sarcastically.
Wow, man, that's unreal. I mean, that sounds like a 3rd and 20 on your goal line. You ended up closing it? It's 3 weeks, done?
Yeah. All that conversation, I told them, hold my beer. I got you. We audibled. We called some quick slants. We ran the hurry-up offense. And by the end of the day, we spiked the ball in the end zone, baby. We closed on time. The seller's on a plane to Rome. My clients are celebrating the new home at the Elephant Room.
Yeah, that's a game-winning touchdown right there, dude. That's freaking amazing. That's a big W.
Yeah, exactly. Complicated doesn't mean impossible. It just means you need the right coach with the right playbook.
We have that. We need to stop that. We really do. We need to get the ball back.
Final thoughts on today's game. We're close. We're 4th and inches from a game-winning touchdown. Let's take a look. We got the Gen Zs. They're making smart plays, right? With their 401k, their gifts, their DPA. While our veterans, they've got the equity. They're not sitting on the sidelines. They're understanding it's all about the blended rate. Not that trophy rate in the 2s, but a blended rate in the 6s. That's going to get them. In the road to Easy Street, you got to get dirty. You got to go through the sewers. What's your take?
Yeah, Anthony, it's about your total debt game plan. It's not just your old mortgage rate trophy. Hey, you got to play offense, not defense. I'll show you. In the words of Wayne Larrivee, great Green Bay Packer announcer, there is your dagger.
So what you're saying is we're moving these chains.
Cha-ching, cha-ching, we're moving the chains, baby.
Great talk, Manly. We learned a lot. We won a lot. We lost a little. I think the homeowners and projected homeowners did the same.
Hey, we got the big W. That's all that's important. Thanks for listening, folks.
Knocked away by Demarius Rondo. And there is your dagger.
Hey, Manly. Knock, knock.
Yeah, Anthony, what's up?
Knock, knock.
Anthony, I thought we cut this out of the program a long time ago.
No, I wrote it back in. Knock, knock.
Oh, goodness. Who's there?
Audible.
What? Audible who?
Audible is you need to lock on to before the market blitzes.
There is your dagger.